Guys, what's up? PipSnipers here, back for another update. So in this video, I'm going to be taking a look at the S&P 500. I'm going to show you the bullish and the bearish scenarios. I'm going to be walking you through many technical patterns I see within the chart. And yeah, let's get into this. So over here, what you have is a macro A, B, C correction. Okay, now this whole entire run up can be regarded as your counter trend. So what we'll do is we'll start the waves from this top over here and back in 2022 of January, December. So you had a 5 wave move to the downside in a descending broadening wedge formation. Okay, you see how well we maintained within this wedge, hitting the trend line on both sides. Now over here, once your 5th wave came in, if you pulled out your RSI, you would see bullish divergence. So we perfectly called the bottom on the S&P 500. And then what happened was we went in for your uptrend, or in other words, your counter trend. So let's get into this counter trend and I'll show you the wave count. So over here you have 5 waves up and you see how the waves are overlapping. This is what's called a leading diagonal. You see how the waves overlap, and then once you get to your 5th wave, that would be considered your A wave. So over here, this is your A wave, and now we're coming, and then we came down for your B wave. Now within your B wave, you have a 3-3-5 Elliott wave flat pattern. Okay, so 3 waves down to formulate your A wave, 3 waves up to formulate your B wave, and then another 5 wave move down to formulate your C wave. Then what happens is we go on for your C wave of your C wave, or in other words, your last wave of your counter trend. Okay? So over here we have a 5 wave move up. So wave 1, 2, 3, 4, and then what you have here is an extended wave 5. So you have 5 waves within this wave 5 over here. This was very overextended. Okay, very, very overextended. Now, now when you came down here, you formed a low. Okay? You came up, went down, and took out all of your buy stops that are placed here, causing a short squeeze and significant short covering, which was the start of this whole rally that we see over here. Okay? So it took out your sell side liquidity. Now, if you look at this high, we've already taken out your buy side liquidity. So all the people who are putting their stops above this line, who are shorting the market, it's already been hit with this move over here. All the people who are putting their stops below this line, it's already been hit over here. So we took out the buy and sell side liquidity on both ends of the market. And now what we're doing is we're coming down for your macro C wave, so we can finish up this correction. I don't think this is the Great Depression yet. I think this is just a recession. Okay? Then we come up next year for a move to the upside. Okay? So this is what a leading diagonal is. So I was showing you that you had your 5 waves in a diagonal fashion, your B wave, and then that gives way to your C wave. So you see the same thing here. Okay. Now, when we look at this is a bearish head and shoulders pattern that we see on the 1-day chart on the S&P 500. Okay. And your technical target, so we're going to go from extremes all the way down to the neckline. We're going to copy and paste this measurement under the neckline so we can find our technical target. And it's sitting at 4,150. Okay, so in the short to medium term, I do expect some type of a move up here, maybe to retest some daily and weekly EMAs and then continue its way down to the technical target over here. Okay, so if you don't know what a head and shoulders pattern looks like, this is what the head and shoulders pattern looks like. You have your left shoulder, your head, and then your right shoulder. Okay, so we see the exact same thing. Okay, so this is another perspective on the wave count. It's just a little bit more clear than this one, just to give you a better visual representation of what I'm seeing. So 5 waves down in a broadening wedge formation, your 3 waves up, and then another 5 waves down, okay, to hit your 100% fib, and then we start our uptrend. Okay, now this is an example of a zigzag pattern in the Elliott wave theory. You have your 5 waves down, 3 waves up, and then another 5 wave move down to complete your C wave. Okay, so we see that kind of thing playing out over here. Now your C wave, so this C wave over here perfectly hit your 100% fib. Okay, I did call this top perfectly, and we did call this bottom perfectly in the Discord. So if you're not in the Discord, please check it out in the link below in the description. Okay, so we can also see if you just take a simple fib from this high in December, January down to this low, we've hit that 786, 886 zone. Okay, so we're pretty overheated over here. And then you see some bearish momentum. Okay, now when I use the time-based fib tool, I see that your 100% fib is lying at around May 2024. And your 786 to your 100% fib is lying around March to May of 2024, which coincidentally is the Bitcoin halving. Okay, so if you agree with the idea that the S&P is positively correlated to that of Bitcoin's price, that gives us more confluence to the possibility of the S&P going up when the halving kicks in for Bitcoin. Okay, starting a new Bitcoin bull run. Now, when we look here in December, January, and we take out the RSI, you have bearish divergence. Okay, so you're making a higher high on the RSI, but you're making a lower high on the price. Okay, so this is called hidden bearish divergence. Or if you want to take a look at it another way, you're just forming a double top. Okay, so you're actually more overheated here according to the RSI than you were over here. Okay, look at the RSI, you can see for yourself. Okay, you see, this is the 2022 high, and then we actually went above that level. You see, came down, came to retest your RSI based MA, and then continue the downtrend. Okay, so now this is my momentum indicator. So I show you this indicator in the Discord. Now, when we take a look at this indicator, anytime it was in this upper band over here, you saw significant price depreciation. Like, for example, over here, it perfectly called the COVID top, right? Now, it was definitely giving you, it was diverging as we were going up here, and then it said bear, and then it said bear again, and then we fell, and we had this whole big downtrend over here. We came up, and what the indicator is showing is that we're as overheated here as we were over here. Okay, so you see it's turning down from extremes. You see the indicator is turning down from extremes over here. So that doesn't look the best for bears. Okay, so let's take a look at another image. So this is the crash of 1986 or 1987, I believe. And it's literally a spitting image of what we see now. Okay, we see divergence, a sharp move to the downside, a sharp move to the downside. Then you have an A, B, C structure, an A, B, C structure, rejecting off the 702, and then a 30% drop. So is that 30% drop pending on the S&P 500? That is the big question, because it looks like we are resembling the top that we saw in the 1986 crash. Okay? So you see now, look, we dropped over 34% from this high. Okay, now this would be aligned, this 30% drop would be aligned to a drop like this, okay, an ABC structure. Okay, so now what I'm going to do is I'm going to show you the bullish scenario of the S&P 500. So over here you have a descending broadening wedge, okay, which is a corrective pattern, A, B, C, D, E, with 3 waves within each wave, okay? Then what you have over here is your wave 1 in a 5-wave motion, your ABC correction in a flat style of a correction. So 3 waves down, 3 waves up, 5 waves down for your C wave. And then what you have here is another 5 waves up to complete your third wave. So you see the difference? So over here, this is, instead of this being your third wave, it's your C wave. But over here, it's your third wave instead of your C wave, meaning that all we're doing now is coming down for an A, B, C correction before you quickly see that wave 5. Okay? If this happens, we're going down regardless for a recession. Okay? Because once this wave 5 comes in, it'll just be too overheated at that point, and you're going to see a recession for sure. So what you're going to want to see on your chart is for these levels to hold here at around 4,273 to 4,200. Okay, you're going to want to see those levels hold. If they don't hold and they start and price action starts digging into this wave 1 territory, then it opens us up to this being an ABC correction rather than a impulsive move to the upside. Okay, like I showed in my first slide. Okay, so let's move on. So now this is the Dow Jones. So similar pattern with the S&P 500. You had this descending channel, right, which was your mini bear market. You came up above the channel, retested it as support, and then what you formed here was a bullish inverted head and shoulders, right? Hit your golden pocket, and now we're just coming back to retest this as support one more time, just like we did over here. Now, if you go below this range over here at 33,400 to 32,682, if you end up going back into this range, that'll be bearish for the Dow Jones Industrial Average. It will be bearish because then you'll be breaking bullish structure, right? So you don't want to be going back into this range, and especially going below it. Okay, or any weekly closes within the range it would just break bullish structure. Okay, so let's take a look at this. So now even with the Dow Jones, you have negative divergence. Okay, actually it's triple negative divergence. So high, higher high, and another higher high. But if you look at the RSI, you're forming a double top. Okay, this is not good. This is not good for bulls. So bulls definitely want to see a step in here, especially on the indicator side of things. Okay, so now I showed you the RSI on the Dow Jones from this high to this high, and you have a double top. If I show you the RSI from here back in December, January to this high right now, this is a triple top. Okay, whereas similarly with the S&P 500, we're as overheated now as we were back here. Okay, the indicators show this. Now let's take a look at the US dollar currency index. Now, since 1973, what we have here is we formed a falling wedge. We broke out of this falling wedge and we retested it as support. In fact, we did a double bottom off of it. Okay, we did a double bottom, retesting it as support, but we also retested this wave 1 resistance as support, and then we shot up. Came down for a correction, and it looks like you have this very strong bullish momentum playing out over here, which will propel us higher. Okay, so this is just an estimated trajectory. Okay, it's not exact, but just an estimated trajectory. So some may argue that this is your wave 5 over here, and now we're coming down for a corrective move. Okay, now I will only agree to a scenario like that in which this is the wave 5 if we if we get if we don't end up closing above this 702. Okay, right now we broke out of this range that we're in here on the weekly time frame. We broke out of the range, and now we're going to be gravitated towards these fibs. Getting above this 702 at 110, and especially this 786, will likely confirm a scenario like this. Okay, it will likely confirm further continuation to the upside. So crypto bulls and stock market bulls, they want to see the DXY reject off these fibs, okay, and then start making its way down. Now if we look over here, this is Wyckoff accumulation, and you can simplify Wyckoff accumulation with buy and sell side liquidity. Okay, so you formed a common low over here, you broke that low, took out your sell side liquidity, and now we're coming up for your draw on liquidity over here to take out this high. So this is just a different perspective. Guys, thank you all for watching. If you guys enjoyed the video, feel free to click the link in the description below. You get access to all of my socials, including the Patreon. If you guys want updates throughout the day, if you want to talk to me personally, if you can ask as much questions as you want, I'll be there to support you, and I can do technical analysis for you on any coin you want and any indice. Feel free to join the Patreon. Definitely follow me on Twitter so you can stay updated, and join the chat if you would like. If you like the video, please comment, subscribe, and like it. Share it to at least one friend, as I wouldn't be able to do this without you. Thank you so much for watching. Peace out and take it easy. See you in the next one.